Welcome to episode 167 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at moving average crossover. Moving averages are a good tool to help us identify the trend, and also it shows us how to enter a trade in the trending market. So let's go on to the charts and take a look at what does the crossover look like and when do we enter a trade once we see that crossover. We're looking at how to trade using moving averages. This is $CAD 1 hour chart. When we use moving averages, there are two different ways to enter a trade. One is by looking at for a crossover, moving average crossover like we have here. So we would normally have two moving averages. One would be a slower moving average, which is our blue one here, which is the 50 moving average, and then we have the 13 moving average, which is the faster moving average. When we look for a crossover, we're looking for the faster moving average to actually cross the slower moving average. So in this case, we have the 13 moving average that crosses the 50 moving average to the downside. When the faster moving average crosses the slower moving average to the downside, that means the price is likely to move lower now. So one thing to remember about moving averages is that this is a lagging indicator. So we would normally see price action move first, and then the moving averages will catch up. So just keep that in mind. But moving averages could be a good tool if you want a confirmation that price is actually going to move in the direction that you're thinking of moving. So from our price action perspective, we see that we have a double top here, and then we have a lower high, which means that price is likely to move lower. So once we get a moving average crossover, that is just added confirmation that you are thinking in the right direction. So if you are not comfortable just with the price action, this can be a tool that you can use, but do keep in mind that this is lagging tool. So price action will show you the entry first, and then we will see the entry in the moving average crossover. So once we see that the moving averages have crossed over to the downside, in this case, we're looking for price to drop. So on the close of this candle here, that's a good place to enter the trade short. Our stop would go above the high here. So we want to make sure we give the price enough room to breathe, just in case price goes and tests this level once again. So we enter the trade short and we stay with the trade till the price comes back into this moving average. So there are two ways to exit the trade. One would be you look for price to cross over to the other side of the moving average. So as we can see from price action perspective as well, price is not able to break the low here and starts to pull back, and our price goes to the other side of the moving average. So this is one way to exit the trade, or you can look for the crossover in the opposite direction. So both of those are good ways to exit the trade when you're using moving averages. So in this case, we can just exit the trade once price closes on the other side of this moving average, which generally means that price is likely to pull up higher or it's going to go sideways. So good time to exit the trade. So just to recap here, in this case, we are using moving averages crossover for confirmation of our trade. So from price action perspective, we already see that price is making lower highs here. We have a double top and then a lower high. So price is moving lower. So if you were looking for an entry, you can wait for prices for moving averages to cross over. And once we see that the price has moved lower and our moving averages have crossed over, we can enter our trade short. When they cross to the downside, we're looking for price to move lower. Our entry would be the close of this candle here, and our stop would go above the high. And we wait for the price to close on the other side of this faster moving average here. Once price crosses over, we can exit the trade. From entry to exit here, we get 73 pips in the trade. So our profit is 73 pips or $730 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. I hope you enjoyed this trade setup. If you like this episode, please feel free to subscribe to the channel as well as share this with your friends. I'll be back with another great trade setup next time.